Hey gang, it's Simon here with your weekly market outlook for the week of Monday, the 17th of November, 2025. Last week was just an inside week for the S&Ps, all right? For the week, we made a lower high and a higher low, and all that really signals is indecision, all right? So what we're looking at now is a whole bunch of yellow momentum bars. The lower time frames have turned red. All right, so we're sort of on alert that there could be a lot of choppiness here, and if we see more and more time frames turn red, we could be leading to more of a downside bias. Right now, price is back into this chop zone, so that argues for more chop as well. The 50-day moving average is still being respected, so the bulls haven't lost control of this chart, but we are not in the same environment as we were back here. All right, that sort of environment, you just buy every single dip. And right now, as we enter a choppier phase, you've got to be a lot more selective. Moves will tend to have less follow through. And counter trend techniques, trading techniques, can be a good addition to trend following. Trend following setups tend to have less reliability if we are entering a trickier, choppier phase of the market than a buy every dip kind of phase. Now, look, the bulls are not dead and buried here. Like I said, this 50-day SMA is coming into active support, and certainly Friday's close was quite impressive. The market was selling off early in the session and managed to close flat. Nasdaq actually managed to close in the green on Friday. But we do want to see SPY at least out of this chop zone and preferably taking out that swing high. Couple of other charts that I want to share with you, which just again kind of signal waning risk appetite. One is IWM. Now, IWM is small and mid cap stocks. This is where a lot of the recent retail favorites live. Okay, I'm talking about the meme type stocks like IONQ is in there, KTOS is in there, OKLO, a lot of these kind of almost meme type retail favorites which have really broken down has led to IWM breaking down. You can see here it's lost trend structure and it is making lower highs and lower lows. Now, I'm not suggesting that the S&Ps or the Nasdaq are going to follow IWM, but IWM breaking down like this, like I said, it is just a sign of waning risk appetite. Another sign of waning risk appetite is how Bitcoin is trading. Bitcoin is no bueno down here. We've got bearish trend structure, and it is just taken out support levels. Key event this week will be Nvidia earnings. They report earnings Wednesday after market. If Nvidia sails through earnings, if the stock rallies post-earnings or at least doesn't fall, I think that would be a big boost for confidence for the market, and that could set us up for a continuation of the rally. If we do see a very negative reaction to Nvidia earnings, I think we'll see a continued unwinding of risk appetite in the market, which could lead to a trickier few weeks. All right, doesn't mean the bears are going to win and the market's going to drill significantly lower, but what we could see is just a lot more kind of sideways volatile chop. Okay, so keep an eye on this 50-day simple moving average, this green line here. If we get a close below that, expect a drop back to 650 or so on SPY. And also keep an eye on the market's reaction to Nvidia earnings. All right, Thursday will be an important day. That's what I got for you. I hope it helps, and I wish you good trading. Thank you.